fourth segment of our ethics module. So today we're going to be looking at some of the reasons why policies can get canceled by the insurer, which again is your insurance company, and what are some of the other different clauses that apply to all policies, right? So when we're looking at cancellation by the insurance company, usually they don't cancel the different contracts. When would they cancel it? One of the reasons that they will cancel is fraud. And then the second reason that they will cancel, obviously, is non-payment of premiums. Okay, so let's take a little closer look at some of these reasons. So the first one is fraud. And with fraud, I have written here no time period. So there is sort of, it can be canceled anytime. So you can be paying your premiums for 40 years. Let's say you got a policy when you're 20 years old, you're paying your premiums for 40 years. And then the insurance company somehow discovers that you have done fraud on your application. What do we mean by fraud? It's a heavy word. So, and how does it differ from misrepresentation? So fraud and misrepresentation are close, but there is a very, very clear difference. So when we're saying fraud, we're saying that you have purposely hidden something where the insurance company may not have insured you if you had revealed it. For example, if they ask if you ever suffered a heart attack and you say no. So chances are you're not really going to forget that you suffered a heart attack and you're purposely hiding that in order to conceal information. That's considered fraud. So let's say that happens and you paid your premiums, you've been always on time and everything is great, and somehow they discover that you committed fraud. They can cancel that policy after 40 years, right? So that's something that it can happen anytime. It's not that they only have to discover it within a certain period. It can happen anytime. The second thing, it's not a reason that they can cancel, but it does kind of go under this category, is misrepresentation. So either somebody can commit fraud, which is a reason to get your policy canceled at any time, or there can be misrepresentation that's done. Now the difference here, the way in which our book kind of describes it, is that misrepresentation is not something that you did purposefully. It may have accidentally happened. So you're not purposely trying to deceive the insurance company. Maybe you accidentally wrote the year wrong of your birthday, something minor, which is not something the insurance company will say, okay, well, if we knew that, we never would have insured you in the first place, okay? Misrepresentation has 2 years. What do we mean by that? Unlike fraud, which insurance company can find out decades later and still cancel your policy, misrepresentation, they have to find out within the first 2 years. If they find out after the first 2 years, they cannot cancel the policy, right? So this is seen as an innocent mistake. It's not done purposefully. It's an innocent sort of mistake that can happen. So that has to be detected in the first 2 years. If they find that out after the first 2 years, they cannot cancel the policy. All right. Those first 2 years are also known as the contestability period. And after those 2 years are up, you're in the incontestability period. All right, so they go hand in hand. What does that mean? So this is when they're kind of testing your policy out and they can make those cancellations. And after that, you are locked into that policy, into that contract, and they can no longer cancel that. Another important clause that applies, and before, so this is a little bit different here. So the non-payment of premiums, I think, is self-explanatory. If you don't pay your premiums, what happens? So if you don't pay your premiums, you get a 30-day grace period. Oops. So 30-day grace. So you have, let's say it's due on the 1st. It's not that if you miss a premium on the 1st, boom, your policy is canceled. No, they give you a 30-day grace period to make up that premium. If you still don't pay it, and if you don't have any reserve in your policy, some policies have different advantages where you can build up a reserve that can be used to pay your premiums. Some don't. So if you don't have that reserve and you have missed the premium and your 30 days grace period is also up, then they can go ahead and cancel that policy, right? So that's important to know as well. The suicide clause, now this is something that applies to all policies. And what this is that if the person commits suicide within the first 2 years of the policy being issued, then that policy is not valid. So they will not pay a benefit to the beneficiary if the person has committed suicide within the first 2 years. that clause does fall off after the 2 years. So they're trying to sort of eliminate people who get the policy just to maybe with this sort of idea in mind. If that person does that after 2 years, then it doesn't apply, the benefit will be paid. But for the first 2 years, it does apply. And exclusions, what this is, so let's say the person is perfectly healthy, maybe they just have some leg pain or, but everything else is good. So the insurance company can put on exclusions on a policy that if anything happens related to that particular problem, then they will not. They will not sort of go through with the policy, but everything else is covered, right? So they're excluding themselves. Or if that person is always, let's say, participating in some very dangerous activity. So if anything happens because of that, they will not pay, right? So they can put those exclusions on to sort of protect themselves, that if the person does do that, then that's what will happen. Now, going back, so I just wanted to bring this up because this applies to all policies. Going back to cancellation now, let's say policy is canceled. The person didn't pay their premiums, 30-day grace period's gone, policy is canceled. Is it gone forever? No. So what is important here is after the cancellation, there is something called the 2-year reinstatement period. So after the policy is canceled, you have 2 years to revive that same policy. Why would anyone want to do that? Let's say they've been paying their premiums. They bought the policy when they're 20 years old. They've been paying their premiums and it was based on age 20. Now they're 45. So if they were to get the policy again, it would be very expensive. Maybe they can't afford it. So they might want to revive the same policy. So what happens, they are able to do that within 2 years after the policy is canceled. It's not fully canceled until 2 years. They have to obviously pay all premiums. All the missed premiums have to be made up. And they may have to prove insurability. So the insurance company might say, well, we issued that policy 20 years ago. We want to do a medical to make sure everything is healthy, everything is good before we reinstate the same policy, right? So they can ask for insurability proof as well. What's very important, and a lot of people forget about this for exams as well, when you reinstate a policy, it resets the suicide clause as well. So now the suicide clause is active again for 2 years. So if they got the policy when they were 20 years old, financial hardships, they made it lapse when they were 30 years old, they didn't pay. And then 6 months later, they said, okay, I want to revive that same policy again. So they paid all their premiums for the last 6 months. They give the insurability, everything is fine. But now for the next 2 years, they have the suicide clause. Right, so it resets when you reset the contract as well. Right, so this is how, in terms of cancellations and how it can be canceled and how you kind of can revive some of the policies again. All right, thank you. And then in the next segment, we will continue on from this section.